right, solo rip with Jake today. Thank you for joining me. So 3 topics as usual. Topic number 1 is Gary Stevenson and his latest take very publicly on the fact that Bitcoin is going to zero. That's really a topic around the map is not always the territory. And something I'm really incredibly interested in, and basically just comes down to, in some ways, luck. Topic number 2, debt. Like, is debt dangerous? Is it good? Should we use it? Can we? How can we use it? And the third is human capital. Just digging into this book that I've read recently, James Hughes Jr., and what it means to actually measure human capital and how important it is for long-term family wealth, not just creation and growth, but protection. And he talks on a very much like a 100-year timeline. So those are 3 things I'm going to run through with you today. So number 1, Gary. Yeah, Gary Stevenson, shout out to Gary, wherever you are. If you are watching this in some way, my name's Jake. Pleased to meet you. I would like to debate you anywhere, anytime around the subject of Bitcoin. And if you would engage with me, we can talk around a question I want to ask you, which is, what is money? It's a very simple question that has lots of answers. And in my mind, I didn't start asking it seriously until 5 years ago. And as a result of doing it, it's made my life infinitely better. And that's largely because it's helped me to see Bitcoin for what it is. And Bitcoin is just money. But money is not something that is that easy to understand. And we've never been taught anything about, what money actually is. And so, yeah, for those of you listening that aren't Gary, which is likely pretty much everyone, great story. So I came across his content on YouTube, really liked it. Gary Economics, spitting truth about loads of stuff. You're like, yeah, cool. I really like this guy's take on things. And Amazon suggested his book. It's called The Trading Game, and I've been reading it, and it's just an awesome story. I love the way that he speaks like himself. It's about his personal journey. And, if I could give you a quick summary, he grew up looking at Canary Wharf in East London, and he was motivated by money. He was a strong mathematician, managed to get himself into the London School of Economics, and during his time there, he just paints such an interesting picture in terms of the kind of characters he was meeting, whether they be wealthy families from outside of the UK come to university in London and would be politically influential in their home country and kind of oozing wealth is how he describes it, or equally then the posh English families that he would meet that were also doing the same thing, coming out of Oxbridge or whatever, that then trying to get work in investment banks in the city. It's just really fun thinking about that experience for him through his eyes, and it's a really well told story. He ends up playing a game, and it's a card game. And in the card game, it's run by Citibank, and he wins, and he ends up being invited to a Citibank competition, and he's just absolutely brilliant at this game. And he figures out before the game is played how the game should be played. And one of the really fun insights that he shares at the very start of the book is like, trading doesn't really matter if you're right or wrong. What matters is who you're trading against. And he then talks about how you can have a buy-sell spread. And yeah, it goes into the intricacies of how you can trade certain products. And through the book, he ends up becoming an interest rate swaps trader for Citibank. And at a very, very young age, like extraordinary exposure to a very, very large and active and potentially financially rewarding market. And it's just a brilliant story, and good on him. Like he grew up looking at Canary Wharf from the East End of London. Everyone wrote him off at every turn, and he made it. He got there. And I haven't finished the book yet, about 10-20% left to go. But he's only mentioned Bitcoin once, and he refers to it as a speculative bubble. And that comes to the crux of this particular rant for this rip. Basically, information travels through markets unfairly. And so it can be the case that it's just pure luck that you know something that other people don't, that you can benefit from. And in other words, as investors, you can have an edge over people. I talk about front-running Wall Street. Like, if you know something that others don't, that means that the value of an asset is going to change in a direction you understand, particularly as long-term investors, and it's basically going up. Happy days. Your purchasing power is going to go up faster than anything else. And it's because of your insight on the market that others didn't have. Now, putting aside the discussion around like markets are always correct, which is really important one to dig into, this is really about something I like to talk about, information asymmetry. Where can you figure out that you know something that other people don't, and you can take advantage from that? And what's fascinating here is Gary will be a little older than me. I think I saw him on a podcast. He was 38. So I'm 36 now. But so we're roughly the same age. He has worked in the belly of the fiat beast, right? Inside Citibank, one of America's largest banks, if not the largest, and trading interest rates. It was it's a wild story of what that world is like. And yeah, anyway, he's very, very dismissive of Bitcoin. He's recently been on a podcast, a trading podcast. It's like the Trades of Wisdom or something. And again, I haven't fully finished the episode, but he's very, 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 very clear in his opinion on Bitcoin. And he makes statements like Bitcoin's going to zero. And it's interesting because is it? Like, what is the probability of that? And why would someone think that? And so just for me to talk through some things from my perspective about whether or not that is or isn't true, could it be the case that Bitcoin goes to zero? Well, yes. Could it be the case that I get hit by a bus tomorrow? Yes. Could it be the case that an asteroid hits the Earth? Yes. It's absolutely possible that these things can happen. But what's the probability of it? And with Bitcoin, I've seen this to be true time and time again. The more you know, the more you buy. Where your mind goes, your money follows. And I see this all the time, right? People just like, they come across this thing, they get to know it a bit more, they experience a rally in purchasing power, and then they start digging under the hood. Now, well, hang on, what is Bitcoin? Well, Bitcoin's just money. Well, what is money? Credit to Gary. He's done an absolutely epic job of playing the cards he has at the time. But where I would challenge him in an open debate is to ask him, what is money? He's extremely good at making money. Like, I think of myself quite like this in terms of going through university, taking business degrees, getting into a broking role. You're highly trained in how to make money, but never stop and go, well, hang on, what is money? You don't end up as a young bloke on a desk trading interest rate swaps if you're not fucking hungry, super smart, and survive for a number of years. On top of that, build a YouTube channel with content around economics. As soon as you start to look at Bitcoin through the lens of money, you realize there's a difference between investing and saving. And that's a really important difference to make. But the sound properties of money give it the ability, or its features, shall we say, store of value, unit of account, and medium of exchange. And what we've grown up with, at least for me in the UK, for example, with the pound, is a unit of account, a medium of exchange, but never a store of value. I just didn't even know that that was a function that money could actually fulfill. Now, in that sense, I didn't really realize that gold was money, right? And then it's like, okay, well, what is money? Well, then you've got to go back through the history of money. You can see how many different things we've tried over time to use as money to solve this problem of the double coincidence of wants. How do we evolve from a purely barter economy to a more complex ecosystem and network of trade? Well, you need money. So money is a technology in that sense. And so Bitcoin is a technology, and Bitcoin is a savings technology. And Gary doesn't understand this, right? I wrote a comment to the YouTube video in which he states Bitcoin is going to zero. The probability of zero, in my opinion, the probability of Bitcoin going to zero is under 1%. And the probability that Gary hasn't spent 100 hours studying Bitcoin is at 99%. Like, he hasn't spent the time doing it. And that means he hasn't understood what it is. And this brings up some interesting stuff. So for some reason, this is a guy that was motivated by money, ended up on the trading floor of a bank, has a YouTube channel about economics, but still hasn't touched together these different information points to realize that actually maybe Bitcoin isn't what he thinks it is. And that's a trade I'm willing to make all day long. Gary, you think what you want, mate. I don't care. What I'm very confident is this awesome first principles approach, that the question, what is money, makes you ask. And then you start talking about the different characteristics of money. You can look at the Austrian School of Economics. You can look at the history of different types of money we've used. And it all starts to click into place. This makes more sense. And so, yeah, well done to the guy who hosted the podcast, because he's made a clickbaity as fuck title, Bitcoin's going to zero, Gary Stevenson. And then you've got a guy ranting about Bitcoin, and he just makes a number of comments that he hasn't yet spent enough time looking at what it actually is, and makes the typical mistake, for example, of lumping Bitcoin in with the rest of crypto. And you can just print more of these things. Well, anyone that's looked at Bitcoin for more than a few hours knows that that's not true. It's a fixed cap, the supply of 21 million. And then it's this idea of, okay, well, let's pull apart what could make Bitcoin go to zero. Okay, well, obviously maybe they can just like switch the internet off. This is something I hear all the time. Okay, well, how do you actually do that? Well, the internet itself is actually quite decentralized, and you start to see that there's internet connectivity in different parts of the world, organized and maintained by different people. So you'd have to get every single one of those internet providers to switch off at the same time. Is that possible? Let's say that it is. Okay, what happens if you do it? Well, if someone somewhere with their Bitcoin node, the totally decentralized Bitcoin node network, which has every single transaction of Bitcoin ever done, you've got to take out every single one of those nodes. And if you take out all of the internet globally, you've got a hell of a bigger problem with the $900 trillion worth of wealth out there than the little 1 trillion or 2 trillion that Bitcoin is. So it's like, there's just lots of reasons why I think going to zero is completely impossible. Then you go and meet the community of Bitcoin. If Bitcoin today is trading at 90,000, 100,000 US dollars, if it drops to 9, what's going to happen? A shitload of people are going to buy as much of it as they can. Right? So what? It's going to go down to 900, down to $9, down to zero. And these people aren't just going to buy, keep accumulating. Like, forget it. These people they're betting their life, right? I die on this hill. The concept of sound money, the concept of a meritocracy. And actually, that's a good point to draw on. Gary, if for whatever reason you ever listen to this, you talk about inequality, and you're not wrong. There is some crazy shit going on in the world right now where the rich are just getting richer. And is that a world I want to embrace and allow to happen? Or is that a world that I struggle with? And putting aside the answer to that question, one thing that Bitcoin does, which is very cool, is it's a system of rules, not rulers. And so even if someone amasses a big Bitcoin stack, they can't change the rules of the system. This is quite the opposite to the fiat world, in which the richer someone is, the more that they can bribe a judge, the easier it is for them to switch legislation in their favor. And before you know it, they've made themselves more money and made themselves even harder to catch or to bring to justice. And so what I invite you to do, Gary, is ask the question, what is money? And that, as an economist, is one of the most fascinating things you can ask, in my opinion. And I am just a guy who sits at home and studies economics on his own, right? I wouldn't call myself an economist, but if you're interested in business, if you're interested in investing, if you're interested in technology, if you're interested in spirituality, Bitcoin is a big deal because it is shifting consciousness. It is raising people's ability up off the floor to own something for the first time. It is digital property rights. It's the best form of property rights ever existing. So it's a big deal, mate. So just write it off. That's fine. But what if you're looking at a map that is not the full territory? What if actually you haven't got all the pieces of the puzzle available to you in one place to actually make the right decision about this? So I encourage you to dig deeper and look at like the history of money. Look at the way that Bitcoin is decentralized with nodes all over the world with a very, very small amount of computing power that's required to run those things, right? That is a stark difference to Ethereum, for example, that has a very small node network and a very small mining network that actually is all controlled by AWS and another couple of large cloud computing providers. That thing is not decentralized. The takeaway point is I am lucky. I'm lucky because, and shout out to Andrew Bailey here, who actually he's coming on the show tomorrow, who I met at the Bitcoin conference in Indonesia, for highlighting this to me as well. It's like there was a number of things that happened in my life that meant that I started looking at Bitcoin more than just some kind of internet craze. And those things weren't all good. You know, the death of my father as a young man, that's shit. But I was forced to figure out how to look after inheritance. And you want to do that job properly, right? Like, how do I do this properly? How do I make sure what was given to me is given to the next generation in years to come? And ultimately, that all takes me to Bitcoin. But another thing I was looking at was renewable energy and how to incorporate more renewable energy into a national grid, and the idea of demand side response, so selling a reduction in demand to the local electricity infrastructure, and how Bitcoin mining as movable load fits into that so brilliantly. It's like the amount of hash rate that the current Bitcoin network has at its disposal is insane. It's the largest computer network ever built. It's done it completely organically with no CEO and viral adoption from the bottom up. It's an extraordinary thing to witness. So when you hear people with a loud voice and a big platform going, Bitcoin's going to zero, ask yourself two questions. One, what is the chance that this person has asked the question, what is money? And then two, what is the chances that this person has done 1, 10, 100 hours of research on Bitcoin? And my guess is that every single time you will find that A, they've not studied it, and B, they're not thinking about what money actually is. So, look, Gary, I'll debate you any day, mate, and reach out if you ever see this. But it's fascinating to witness. Yeah, good luck to everyone out there. But the information is there if you choose to look. Next, I want to talk about debt. I actually think debt is older than money. And the reason I think that is because it's actually Lynn Alden's book, Broken Money, brought this to my attention really well, is the idea of a hunter-gatherer tribe, very small community. And just a random example, you might have two types of hunter, right? One is a fisherman, the other one hunts deers. And they want to exchange a hind leg for a fillet or whatever. And in your head, you can be like, mate, I gave you a fish last week. You owe me some deer. That, in a way, is a form of credit, right? It's an IOU, and it's just stored in your head. And the same can be said for when you go and get some milk off someone who has, managed to figure out how to milk their goat, or you get a piece of clothing from someone, or you name it. Very, very small community. And with that, it's possible to keep a ledger or a database in your own head for the debts you owe and the debts people owe you. And that in some ways solves the double coincidence of wants problem. How do you trade with each other when you can only swap physical items? And that's pretty cool. Glass beads, coins, through to today, what we have is the fiat currency system. And so in its modern form, debt is still the same thing. It's an IOU. So I'm going to give you something that you're going to pay me back at some point, and you're going to hold on to it for a period of time, and you're going to pay me for it whilst you've got it, and you're going to give it back to me at the end. And because we live in an environment of fiat currency and central banking, it's a very cozy relationship between the monetary policy makers in central banks and the political scientists sitting over in government. And basically, they pay for each other. They scratch each other's backs. And it's kind of dangerous, right? This was something I didn't touch on completely with the Gary Stevenson rant from before, which is basically inequality is a problem, absolutely. But why is it happening? Well, I think it's because of the money. It's because of the Cantillon effect. It's because of the fact that someone out there can print their own money. And the rich get richer in an environment where the person with the most assets, hard assets, we're not creating more goods, we're not creating more services, we're not creating a vast amount more housing, etc. Hard assets in an environment in which they just print more of the currency. What does this mean? So in the sense of debt, like everything around us is debt. And so if they're going to play the game, well, maybe play the game too. And to give you context for this rant, it's like, okay, I want to buy a house. All right, well, the housing market is highly leveraged. Everyone knows this, right? I can't remember the exact data. It was actually less than what I expected. From memory, in Australia, 50 or 60% of properties are leveraged. I thought it would be more than that. I don't know how the rest of the housing market is able to do it, certainly if you're entering the housing market without debt, especially when you look at the average salary, right? So average salary versus average house price, those two things are diverging, and it continues to be the case over time. Why is that? Well, I personally think it's because of the money printer, right? So with debt, so how does it actually make sense? Well, with a house purchase, I calculated around 6% completion cost. So that's the paying government stamp duty, that is paying any agents that you might have involved, paying for the transfer of the asset into your own name. So that's already a big chunk, right? 6%, okay. And the debt fees as well, right? You've got to pay the loan origination fees and whatever. But if you can fix a piece of debt for a period of time, and you know that the asset's going to increase in value because of the likelihood of more money printing, at what point is debt actually useful? Well, it's useful in my perspective because if I'm sitting on a portfolio of which, let's say it's 80% Bitcoin, and you're like, okay, well, I want to buy a family home. How do I do this? Well, if your Bitcoin has appreciated well, let's say you're sitting on a 4 or 5x on your Bitcoin, you could sell some down. So why not take 25% off the table? You pay the capital gains tax when that comes due, and you say, job done. Okay, now I've got a deposit for a house, and I still have a good long Bitcoin position to ride out the next bear market and hit the next high in 3-4 years' time. That kind of makes sense. You could also potentially use that Bitcoin position to pay the loan fees, so your debt, your interest servicing fees over that period of time. And maybe, just maybe, it's time to actually start looking at this more seriously. Like even with a 10% interest rate, if your house price continues to appreciate, that's not a bad thing, of course. If you can carry the debt, then you're able to actually keep the asset. And the point being is you don't have to sell all your Bitcoin to buy a house that then doesn't really do well financially. So you want to try and keep as much Bitcoin exposure as possible. I sold a family home in 2022 in favor of taking a bigger Bitcoin position and in favor of renting a nicer house in a nicer area. The reality of moving a young family around and renting has been much more stressful than I expected. And it's taking up a huge amount of mind space, of energy. It's like, God, where are we going to live? And in some ways, we've got too many choices. And that's a great place to be. Don't get me wrong. I'm not going to complain about that at all. But it's this sense of energy. If your energy is being consumed by one thing, then by definition, it can't be consumed elsewhere. And if you want to be creative, if you want to build a business, if you want to do a podcast, if you want to be a better dad, and your energy has been sucked out of those things to go elsewhere, well, maybe you're not making the right allocation. How do we use our time? That is one of the most important things that we can possibly figure out. And so, yeah, I'm like, right, maybe it's time to buy. Maybe I just need to take a big loan and get on with it. And some of my hesitation is around just like some of the numbers that are coming back. You're like, fuck, is that really how much I'd have to pay in interest every month for a house that I wouldn't even consider to be that incredible? It's just the going rate for a property in the area that I live in. And so it's a bit of a head fuck, to be honest. You're like, how does this actually make sense? I mean, last year I had the best investment year I've ever had, should in theory be as wealthy as I've ever been, but I still can't afford a house that I want. Like, what the hell's going on out there? And so I truly believe that maybe it's time to kind of take this debt thing more seriously. Oh, you can't be in debt. Well, maybe you can, but done in a strategic way and sensibly. And so I'm still trying to figure this out. But yes, go back to my use case. Okay, you sell down some of your Bitcoin gains, you now have a deposit, and then you can go and get some debt, whether it be a mortgage or private market loan, however you can figure that out, and go and buy a property and sit in it, for as long as you need to and for as long as you might want. And there's another angle to this which might also work, where here in Australia, there's something called the monochrome ETF, the Bitcoin ETF. You could actually, instead of selling that 20% of your Bitcoin position, you could move that Bitcoin into the ETF, and then you could, because it's been structured in such a way that you don't trigger capital gains by moving it out of your own custody into the ETF product, and also back out. So that's quite smart on their behalf. I don't exactly know how they've done it, but it's some kind of trust product. And using the ETF, you can get a loan against the ETF. So actually what you could do is you could take 20% of your Bitcoin stack, create an ETF position with it. You can then get a kind of 50% loan to value ratio. And I believe the interest rate's around 3-4%. And the reason it's so competitive is because this is now securities lending. And this is very, very common, right? People take loans against their Apple stock all the time. You could then have the cash to put down the deposit. My fear with this, though, for the real estate ultimately, is the margin call. And like, how do you get your head around that? So, okay, what if Bitcoin drops in half? Well, you've got to put in more Bitcoin to your ETF product, or you just say goodbye to the Bitcoin. Maybe you risk it. Maybe that's fine. Maybe it's just a case of Bitcoin is money and you've got to use it sometimes to get real stuff that you actually need. So yeah, I'm just trying to figure this out. Basically, it's the case that it's just not that easy to take debt against Bitcoin. And especially when it comes to real estate, because the real estate market it's interesting. It looks at the house as an asset, and they're willing to give you a loan, aka a mortgage, because that asset's on the chopping board. we think this asset's worth $2 million. We're willing to give you a 75% loan. If the asset came into our hands, we're confident we'll get our money out, even if the market's dropped, because we've only got 75% of the value. And your deposit might get wiped out if things go wrong, if you can't pay the servicing fees, which you can see happening all the time, right? People 2, 3, 4 years ago were taking debt, not even 5%. And now you're looking at, 6, 7, 8% for a long-term mortgage. It's a different ballgame. What's so surprising, though, is the real estate market here in Australia, I don't really see it coming off that much. I was expecting to be well down from where it is. And it's because owners, I think, have been able to weather the storm pretty well. And they might put properties on the market for sale, haven't seen the money they wanted and just kept them. And so is it a case of biding your time and waiting for that to fully capitulate? I don't know. This particular phase of the solo rip, it's a bit of a jumble. Apologies for that. I'm sure there are people out there that are going through similar things where it's like, okay, how do I buy this real world asset? How do I not sell the fastest horse in the race? And how am I then able to carry the debt for as long as is necessary? It's hard to do, essentially. And so, yeah, I'm figuring that out. If anyone has any good suggestions, I'd love to hear from you. Do get in touch. Because, yeah, it would be so cool to see. I guess final point is there's a law in the US, the SARB 121 regulation that basically ensured they couldn't put Bitcoin on their balance sheets, the big banks. That's now been altered, so they will be able to do it. So it's not far away, in my opinion, that you'll be able to custody Bitcoin with a commercial bank with a very, very long-term, high-integrity, too big to fail brand that a lot of people might be able to trust versus the startup stuff that's going on. I think it's a case of, on the one hand, Jake, just bide your time, don't take on any debt, don't take any risk, and just sit on your Bitcoin position, which is going to outpace everything, figure out how to rent, versus maybe it's time to strap on the big boy pants and take on a loan, figure out how to carry the debt the whole time, and enter the property market in a serious way. We'll see. So finally, human capital. So yes, I spoke about this recently, and it's a big theme of the podcast. The reason this was so compelling is my mentor, Jason Parks, shout out to Jason, has introduced me to this book. So James E. Hughes, and it's called Family Wealth. I'll drop a show notes link if anyone hasn't come across it. But I think what was so compelling about it is this idea of human capital that I hadn't considered before. And it's basically looking at like families. Often it's very common. Wealth is created, spent, and gone within 3 generations. The shirt sleeves to shirt sleeves fable. Basically, one aggressive entrepreneur builds a valuable business. His son feeds off his dad's coattails and builds a big business. And then generation number 3 had no idea what it was like to have nothing, has forgotten the need, and basically squanders it. And what James Hughes has tried to do is study, how do you not do that? Who is a living example as a family who has managed to retain wealth over 100 years? And so he's talking about setting strategy as a family for 20 years, 50 years, 100 years. And this is something I found very compelling. Literally the day that my life changed, I watched a YouTube video with Michael Saylor and Raoul Pal in October of 2020, and it was Bitcoin Infiltrates Corporate America. I'll never forget it. Michael Saylor telling his story to Raoul Pal and basically talking about how do I know 100 years from now that someone has the best possible chance of my company surviving? How do I know that the CEO in 100 years from now has got as much chance as possible? I'm going to sell $300-400 million worth of my treasury reserve, and I'm going to buy Bitcoin. And it was just a massive moment. But what was cool about it was the time frame. It's 100 years. Well, that was how I was trying to think as well. And recently coming across this book, Family Wealth, it's in the same vein. It's you've got to be thinking super, super, super long term. And so one thing I'd been missing in this book hammers home is the idea of humanistic capital. And so what is that? Well, it's people, essentially. So a family that never has any children is not going to be able to sustain wealth over multiple generations, obviously. But then it's a case of, well, obviously you need to have kids, but what do those kids do? And how do they interact with the preceding generations? And so he suggests some interesting things. For example, each year he has families that he works with as a lawyer and managing this stuff that they basically reaffirm their commitment to the family with some kind of ritual, whether it's like a weekend getaway for the whole family, and you restate your vow to the family and whatever the family's values are or something. So okay, that's kind of a cool idea. It binds everyone together in some way, whether you're married into the family or whether you're just a junior person who's a great granddaughter or a grandson or something. And following on from that, he then talks about encouraging families to actually document their human capital. So what do we know? What can we actually do right now? And that's a case of really documenting skills. And so he encourages every single family member to write a resume for their burning passions currently, the biggest wins of the year, the biggest losses of the year, what they learned, what was a mistake, what failed. There's essentially a group of elders at the top of the family that are able to kind of curate this together and go, okay, actually, this is the human capital of our family. This is the capabilities we currently have. And where it gets really interesting is how they then create that and / manage it. So let's talk about managing first. It's like, instead of me, for example, looking at my aunties and uncles or my grandparents, it's very vertical. Like, this is such a natural thing, right? You think about your family in verticals, but what if you were to suddenly open them up to horizontals? And I would think through, okay, well, if I was to combine together with all my cousins, what could we do? Like, what do we all know how to do? And the truth is, I don't know. I honestly don't know what half my cousins do all the time. And so this process would be so interesting. It's like, right, I didn't even know you were doing that. And so the challenge is to essentially to make the skills and expertise of the family more transparent. The final piece is how to entice that. Is he talks a lot about philanthropy and developing friendships between grandsons, granddaughters, and their grandparents. And so from as young as 5 or 6 years old, a family member is encouraged to pitch the family for funding for something that they care about. And then they make donations. So what size this is done in, not sure exactly. What is allowed to be donated into, don't know exactly. But it's a fun idea where basically grandchildren are able to connect with their grandparents in a way that it's kind of like investing with training wheels, right? And that's where this guy's getting at. Who would you like to give money to and why? And you'd have to pitch for that, and you have to create and by the time they're 10 years old, there's actually like a written document that comes with it. And it's a really cool idea. The thing that really got me, I guess, though, is then because, well, he's describing all these different ways of helping families become better organized and better managed. And it's all about, of course, setting strategy from the very top and leadership from the very top, but then equally driving change from within and empowering each new generation to behave as if they're the first entrepreneur. Like, it's kind of like recreating that sense of go-getter, right? That original, that plucky entrepreneur that set out to go and do something new. And this is obviously one of the reasons why the proverb of shirt sleeves to shirt sleeves is so common, is because by the time generation 3 turns up, what are they fighting for? They didn't have a burning passion about something. They're inheriting 2-3 generations of work. Admittedly, that's important, but like, maybe they're not passionate about what the business is that's been built, or they don't care about the product. They don't care about the impact. They have other interests. And so what this guy, James Hughes, is talking about is actually creating an environment in which it's encouraged by the family for the younger generations to actually focus on what makes them happy. What do you love doing? And then trying to empower it in some way by investing in them somehow. So that concept I spoke about before of a grandparent working closely with a grandchild on a pet project of theirs as like a 6-year-old, by the time they're 10, they're more sophisticated again. By the time they're 18, well, that grandparent's watched them for 10 years pitching for money around an area that they love. It's like, well, how can you make a career out of that? What do you love about that so much that you can do better than anyone else in the world? How can we as a family enable that? How can you go and live your dream? And this is just something I think that is, in some ways, it's completely already prefabbed into me and written into the family the families that I'm from on both sides, unwritten rules or whatever. But wouldn't it be nice if they weren't unwritten?